This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're watching us on Bazaar Morning Call. We're live from the CNBC TV18 Motilal Oswal studio. At the onset, let me wish all our viewers a very happy festive season. Today, through the day, you'll be seeing all of us in our festive gear and festive cheer. So, good morning to all of you. We kickstart a brand new week. Nigel is here with me. In a bit, Prashant will be with me as well. Nigel, it's not only festive week, it's also a day today that comes in after a holiday and before a holiday. Isn't that the best?
Absolutely. You just come in there, get through Monday and you're off again on Tuesday. So, happy Dussehra to all our viewers. And it's a good time, Sonia, right? Maybe the equity market's in a bit of a flux for the time being. But India came out on top yesterday, so I'm quite pumped about that. And it appears that this World Cup campaign is shaping up very, very well. So totally excited about that as well. Prashant, what else?
Morning, guys.
Hi,
all
morning.
looking nice and festive. And always makes you wonder, why can't we dress like this every day? Right? Well, happy Dussehra to all of you, as Sonia and Nigel said. And yesterday was, there's so much debate about what Kohli did towards the end, right?
Fine.
And, but we won.
That's all right, as long as you
the
win.
match was in the bag. That's what I was telling a lot of people that... I thought it was okay.
It was okay. And Dharamshala was supposed to be a difficult venue for us. So we came out on top.
Exactly.
And we dropped a couple of catches. Maybe you can debate about Kohli, but for me, Kohli is the king. He's the big-time player. He delivers when it's needed the most. And people were writing of Rohit Sharma as well as captaincy.
Oh, no.
It's been absolutely splendid, in this World Cup so far.
We had Srini, a sports editor, who said that actually Kohli, without the captaincy, is a free man. He doesn't have to think about anything else except his batting.
Yeah.
And I think it's turning out that way, right? Especially so far in this World Cup campaign. Let's actually come back to cricket in a bit from now. We'll have time for that. Let's start by telling you what you need to know as we start and begin another trading session. So, it's a bit of a risk-off kind of a mood environment out there. Global markets are in a risk-off mode. And I want to start by saying that there's a holiday tomorrow. So that kind of adds to it in the way that you don't want to go big before a holiday in one market whereas the other markets are trading. So I think keep that in mind because that will have an influence, should have an influence rather. US markets sold off on Friday, so equities were down. The Nasdaq was down about 1.5%, 1.53. And what signified that there was a risk-off was that gold prices are now closer to $2,000 than they've been in a while. So that's basically characteristic of the environment we are in. The dollar was flat, the dollar index, that is, oil prices were flat. The dollar index is slightly above 106. Oil prices are about 92 plus. They came off a little bit, but not by much. Now, it's so, the treasury market, the US rates market is so volatile that I did the same thing last Monday when we started the week. Not look at what happened on the Friday before, but look at the weekly change. So the 10-year in the US went up 30 basis points last week. Right? And this after falling 18 basis points the week before. So what are we doing here? Is there a real clear direction? If you talk to people who track this market, they tell you yes. And the direction is bond prices lower, yields higher, even though on Friday, and this is accounting for the 30 basis point rise, yields came off about 7-8 basis points. The reasons behind the rise are likely to remain operative in the next few months as well. What are the reasons? Higher growth, so-called US exceptionalism, right? They can print all the dollars they want. Borrowing is not a problem, at least for now. At some point in the future, it will be. There are technical aspects like supply of bonds, etc. as well. Labor market is very strong, etc., etc. So these reasons will not go away. And that's the reason why many believe that, US yields perhaps will stay higher for longer. Powell, of course, indicated that financial conditions are not, and I quote, too tight. So this is another one of those reasons where the Fed is itself saying that maybe the neutral rate is slightly higher. We discussed all of this last Friday. Just to tie all of this back in, the risk-off environment to the levels here, the big support for the Nifty stands at the 200-week moving average, which is 19,438. We left off at 19,542. 19,500 is the first level, but that will most likely, perhaps, it got tested, but around the 19,512 or odd levels was the low on Friday, and then there was a bit of a bounce. So the real level is that 200-week moving average, which is 19,438. Below that is the October swing low for the Nifty, which stands at 19,333. And that is the next support which will start to come in. For the Nifty Bank, supports still. I mean, the first one is the 43,600 level for the Nifty Bank. Again, you know, we were talking about how maybe, just maybe, there is a double top indicator because of what happened last Wednesday and Thursday, but the chances of that were low, and we did end below that particular level. So the next support for the Nifty Bank stands at about 43, just under 43,200, which is the 200-day moving average for the Nifty Bank. Again, not very far away from where we left off. And the resistance for the Nifty Bank stands at about 44,300, 303 to be precise, which is the 20-day moving average on the way up. So these are levels that you need to work with. But mind you, this is not a market to chase higher. If you see strength, this is the market, if you are compulsively inclined to trade, to get in and get out in a very tactical kind of a way, intraday, not carry positions, especially not today, because tomorrow is a holiday once again. The Gift Nifty is indicating a 45-point lower start. Sonia.
I like the fact that you started with tomorrow's a holiday and you ended with tomorrow's a holiday. So in case somebody missed out on...
The most important.
All right. Well, you know, today I think there are many positive triggers that the street can latch on to. And in that context, I think that despite the negative, global environment, the market is definitely going to move up by the end of trade. At least that's the sense that I'm getting. Now, we start off with what came through on Kotak Mahindra Bank, where finally the uncertainty has been lifted. They've got a new CEO on board. Ashok Vaswani is the new CEO of Kotak Mahindra Bank, and he comes with a lot of experience. He was a former CEO of Barclays UK, and of course this ends all the uncertainty. Perhaps it could end the underperformance as well. Kotak Mahindra Bank's numbers were also quite decent in terms of both loan growth, handsome loan growth of 18.5%. Asset quality was the best in 33 quarters, so that's one stock that the street will latch on to. The other is ICICI Bank, complete purple patch, as JP Morgan put it in their note. Very strong earnings, management commentary is positive, the loan growth is healthy, the asset quality has improved. So, both Kotak and ICICI Bank form about 12% of the Nifty. In that context, they could perhaps together take the Nifty higher. But not just that, other financials like, for example, Paytm reported very good numbers as well. The EBITDA performance has been improving sequentially, and this time that continues. So they reported about 150 crores of positive EBITDA versus a loss last year and versus 84 crores of positive EBITDA last quarter. So a couple of these results could definitely take the market higher. However, the global context is not great. On Friday, the Dow ended with a cut of almost 300 points. And, we continue to see 10-year yields at that 5% mark. Geopolitical tensions have escalated across Gaza and, because of what's happening with the Israel-Hamas war. So that is something to watch out for. But back home, there is so much strength that perhaps our markets could overlook the kind of negative cues that we have from across the globe. In the context of earnings, we have some big, some heavyweights reporting their numbers. We'll end the week with Reliance, and through the week you have Asian Paints, Maruti, etc. So all eyes will be on that. But otherwise, I don't think it's a bad outcome because you have two big boys, Kotak and ICICI Bank, that will perform today.
Well, and the bulls will be counting on the banks to bail them out. And the banks and the financial services index, both of them will be in focus. As you mentioned, ICICI Bank and Kotak Mahindra Bank, they'll react to numbers. HDFC Bank for the last week, it's been going numerous times closer to around the 1,500-odd mark. And from there, it's seen a bit of a bounce. So that 1,480 to around 1,500, that seems to be a bit of a buy zone. And that's precisely what's happened on HDFC Bank even on Friday. Nifty Financial Services Index, well, that plays out the weekly expiry because tomorrow is, we're closed tomorrow. Looking at the options data on the Nifty Bank first up, the 43,800 strike, well, it was fairly active in Friday's trading session. The premium is roughly around 250 rupees. So there is writing being seen out there. Now, we'll have to wait and watch whether or not this particular strike gets unwound. Because those call writers, well, they are playing that the 44,050-odd level doesn't get breached. So that becomes the first resistance level. On the downside, last few sessions, last week, we went closer to around 43,500 and we bounced off that mark. So that becomes the support zone. In terms of technical indicators, the 20 and the 200 EMA, that's the broad range that you're looking at. So on the upside, 44,050, then 44,300, which is the 20 DMA. That's the mark you're looking at. On the index itself, the FI as well, the net short. And the short positions actually have gone up by close to around 18,000 contracts, in the last few sessions. So it was at around 72,000 odd. Now we're closer to around 90,000. Remember, when we go to around 100,000 odd, that's when we see a bit of a near-term bounce. There's some shorts that do get covered out. So that's the FI positioning as we speak. The Nifty, on that index, if you're looking at the options data, 19,550, 19,600 call, both of them, between them it added close to around 60 lakh shares. and there was writing being seen at those levels. So just plugging in those premiums, you get your resistance zone at around that 19,650. And that perfectly ties in with the 20 as well as the 50 DMA. So if we can get up and going, you're expecting some bit of resistance to come in around that mark. On the downside, 19,500, that seems to be a bit of a support zone because we have quite a bit of open interest built up out there as well. The Gift Nifty for starters was indicating a flattish to a mildly negative start. But I think the Nifty Bank, that's going to be the important one. The bulls turn to the Nifty Bank to bat for the bulls. So let's see how that goes. A 50-point downtick. I think that gets bought into. Trail your stop loss as well and see how it goes from there.
Okay, well, we have lots coming up on the show in the next 2.5 hours. So without wasting any time, let's begin with some money market views. The rupee has been quite weak actually for the last many days. But B. Prasanna of ICICI Bank says that the underlying strength of the dollar is intact, supported by stronger US economic data and geopolitical uncertainties. He says the central bank's support has helped Asian currencies from further depreciation. He adds the rupee continues on the path of slow, gradual depreciation guided by oil buying, equity outflows and RBI intervention on either side. He expects the rupee to trade in a range of 83 to 83.50 this week.
Okay, well, on bonds, B. Prasanna says that global yields resume their upward journey on strong data and receding risk off. While oil continues to consolidate at higher levels, he says these factors resulted in pressure on local yields as well. Goes on to say risk of OMO sales continue to linger as system liquidity is expected to get a major boost by the beginning of next month. He expects the market to tread cautiously with a 10-year benchmark bond yield ranging between 7.3 to 7.4%.
Well, we've got a lot of stocks to track today at our special Top 10 segment. We get to that in just a bit for now. For the time being, we're running through the list. We're looking at ICICI Bank, JSW Energy, Paytm, RBL Bank, L&T Finance, Tejas Networks, Ipca Laboratories and Zydus Life. All of them will be reacting to positive news flow, while on the flip side, Kotak Mahindra Bank, Amber Enterprises, they are stocks that could be reacting to negative piece of news over the weekend.